the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're listening to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares rose today as investors look to kickstart the week on a positive note. So if we look at the Straits Times Index, it was up 0.22% at 3,934 points at about 2:40 p.m. Singapore time, with a value turnover of 634 million Sing dollars in the broader market. Now let's take you through the closing numbers. The STI was up 0.25% at the close at 3,936 points. In terms of value turnover, we are looking at 1.08 billion Sing dollars. The gainers outnumbered losers 276 versus 226. Top advances for today we've got for you GMH USD, DBS and ASUS. And top decliners, we've got here iFast, Jardine Cycle and Carriage, and New Incorporation USD. Now, in terms of companies to watch, we've got here DFI Retail Group, after the firm announced today that it will be divesting its Singapore food business to Southeast Asian retail conglomerate Macrovalue Malaysia. Now, elsewhere from news, net loss deepening for the fourth quarter ended December to Jack Ma-backed Ant Group reportedly using Chinese-made semiconductors to develop techniques to train AI models at a lower cost. We've got more corporate and international headlines in focus. Also on deck, how Singapore's inflation fell further in February. Now, let's break them down with David Kuo, co-founder of The Smart Investor, joining me on the line. Mr. Kuo, how are you?
I am very good. How are you, is more importantly?
Good. I'm just thinking about my potato chips and the house brand chips that I love. Okay, but Mr. Kuo, let's start with the Singapore stock market as usual. How did the STI fare today? Any surprises when it comes down to the companies to watch? Say UOB, after its CEO Wee Ee Cheong's annual salary for 2024 dipped, despite the bank reporting there's a record net profit for the full year.
Okay, I'll talk about Wee Ee Cheong just a little bit later, but sure. I would like to focus on some of the main movers in the market today. There was a whole bunch of REITs, real estate investment trusts, that did quite well today. So we saw gains in CapitaLand Integrated Commercial Trust. We saw gains in Mapletree Industrial Trust, Fraser Centrepoint Trust, Mapletree Pan Asia Commercial Trust, etc., etc. And it looks as though the market seems to think that maybe interest rates could be on the way down, and that not only have REITs turned the corner, but maybe they could do quite well. And so many investors are probably thinking now's a good time to lock into some of those REITs and take advantage of those better dividend yields than you can get from savings account interest rates. So that's the general view of the market. Down at the bottom, we had Jardine Cycle and Carriage, which has a huge exposure to Indonesia. And we know that there are some problems over there at the moment, so not surprising. Hopefully they'll get that sorted out at some point. So winners and gainers, winners and losers today. REITs are the winners, and anything that is exposed to Indonesia didn't do particularly well. So back to Wee Ee Cheong.
Yeah.
Do you know how much he earns a year?
16 million, yeah, that's the number, yeah?
And we're talking about a salary of 15 million, over $1 million a month. Come on, Tian Tian. I mean, if you were earning over $1 million a month, you wouldn't be talking to me on the phone right now, would you? Yeah? So, I mean, sure. I mean, his salary has dipped a little compared to last year. And some of the bonuses and benefits that he's getting will be deferred over a period of time. So I don't think he is short of cash at the moment, and I think 15 million is quite good. I mean, when you compare what he's earning to what Piyush Gupta was earning, I think that was about $17 million a year. So, yeah, I mean, it's a smaller bank, but he's earning quite a decent salary. Nothing to worry about.
Okay, and Mr. Kuo, I'm just worrying about my potato chips and the house brand chips, candies, biscuits, and whatnot, because on the list of companies to watch for today, we've got DFI Retail Group. Now, shares of DFI Retail Group jumped 5.8% earlier today after the supermarket and retail store operator announced its divestment of its Singapore food business. Now, how would you read into the move? And again, how far are investors' reactions in line with your expectations?
Well, it was a shot out of the blue, Tian Tian. I didn't expect it to happen this quickly. I mean, sure. I mean, when you have a look at what DFI has been doing, it has divested its supermarket, cold storage in Malaysia. It sold Hero Supermarket over in Indonesia. And it also got rid of its stake in a Chinese supermarket, Yonghui. So I suppose it was bound to happen. But when you have a look at DFI, its turnover from the supermarket is about the same as the turnover that it has from its health and beauty division. And yet the supermarket only makes a fraction of what the health and beauty side makes in terms of profits. So I think what DFI is saying is that it's getting increasingly difficult to operate supermarkets, not just in Singapore, but even in Malaysia, Indonesia, and they want to get out of that business and go into something else. What that something else is, I'm not entirely sure, but I think what it's saying is that it's getting too competitive here in Singapore. And when you have a look at where the cold storages are located and where the marketplaces are located, they're in shopping malls. I mean, the rent in shopping malls are going through the roof. So I guess what DFI is saying is that their costs are increasing, labor cost is increasing, rental cost is increasing, and then food prices are also increasing. And if they were to try and pass on some of those food prices to people like you and I, your potato chips, for instance, then it is going to become difficult for them to operate, because how do you operate in that environment? It won't be the first time that it's actually sold a supermarket. I remember back in the 1980s, they had a stake in a UK supermarket called QuickSave, and they tried to get into the UK supermarket scene that way, but they sold their stake in QuickSave also. So maybe they're going to exit that and focus more on things like Guardian, 7-Eleven, which are much higher margin and probably lower cost in terms of rental. So it's a good move for them, and I think shareholders are pleased. I mean, looking at the share price today of not just DFI Retail, but also Jardine Matheson. Both of those were at the top of the leaderboard today.
Okay, and Mr. Kuo, another company to watch for today is NIO, a Chinese EV maker. Its net loss deepened to 7.1 billion yuan or 1.3 billion Sing dollars in Q4 ended December, despite delivering a record number of vehicles in the same period. Still, that being said, NIO believes its financial resources will be sufficient to support operations in the ordinary course of business over the next 12 months. Question to you, how concerned are you about NIO's financials at this point, given the competitiveness of the market?
Well, let me relate to you a little ditty that I wrote many, many years ago.
Yeah.
Revenue is vanity, profit is sanity, cash is reality, everything else is pomposity. Okay? So, yeah, revenues are great, but as far as NIO is concerned, it's operating in a very, very competitive market. And it isn't that difficult to start up a EV company. You and I could do it quite easily. I think I've mentioned to you this before. And in the case of NIO, what it has to do is to keep up with new models all the time, which means a lot more research and development and marketing in order to get its product out of the factory floor and into our parking spaces. And that is a very costly exercise. So I guess what NIO is saying is that this is a long-term game, and it's going to take them a long time before they are going to be profitable. And I think shareholders have to accept the fact that they're going to have to bear the pain as NIO tries to compete with BYD, who is turning out to be the market leader at the moment. It's even wiping the floor with Tesla. And Tesla has its own problems because its CEO is too busy doing other things right now. And it's not concentrating on what he's supposed to be doing, which is running a car company.
Let's stay in Singapore, Mr. Kuo. Today we've got Singapore's latest inflation numbers coming in. And Singapore's inflation, in fact, fell further in February. If we look at the core inflation, it declined for the fifth straight month. And I believe the number was nearly the lowest in 4 years. So how would you read into the numbers? I mean, core inflation down to 0.6% year-on-year in February. How would you read into numbers? What are the implications for the dollar's near and the possible spillover effects on local equities?
Okay, so if we take a couple of those things first. inflation coming down is good news. It probably means that interest rates could also start to moderate slightly, but Singapore doesn't really use interest rates.
Yeah.
It uses the exchange rate in order to try and control the price of imported goods coming into Singapore. But I think generally what we're seeing is that, yes, interest rates are going to be edging lower, which is probably why when we go back to what we said right at the beginning of the show, Tian Tian, people are locking into the REITs at the moment because they're hoping to be able to capture some of those higher distribution yields right now. But apart from that, things are still pretty expensive in Singapore, Tian Tian. Yes, the rate of inflation is coming down. It doesn't mean that prices are coming down, Tian Tian. It just means that they're not going up as quickly. And so when you compare prices today with a few years back, things are still quite expensive. And not until we start seeing a reduction in prices, which I don't think we'll see in our lifetime, things are going to be quite expensive still. But thankfully, the rate at which it's going up is slowing, which I think is a good sign right now. So people should take comfort from the fact that, yes, at least one part of our cost of living is starting to come down. There are other parts that are still rising. Housing cost is still rising. Health is still rising. But at least generally the basket and food prices hopefully aren't going to be rising as much. So in terms of the Singapore dollar versus the US dollar, the nominal exchange rate, I think we could see a weakening of the Singapore dollar against some of the major currencies out there.
I see. Now, if you're just tuning in, we're in conversation with David Kuo, co-founder of The Smart Investor. Well, across the region, Mr. Kuo's sources familiar with the matter said Jack Ma-backed Ant Group used Chinese-made semiconductors to develop techniques for training AI models that could cut costs by 20%. How far will this be a further boost for Alibaba, given the recent optimism surrounding the firm?
Well, we have to see what exactly has come out. I mean, what they said, what Ant Financial said, was that the cost of training AI models is 20% cheaper at the moment than previously. So that, I presume, is a good thing. But I think what it also tells us is that who needs NVIDIA chips? Because, I think the training of the AI model still uses some NVIDIA chips, but this is really a poke in the eye for America, which is trying to restrain China from getting hold of high-end NVIDIA chips. And China is saying, well, I can make do with older chips. I can make do with chips that are probably slower. I can make do with homemade chips, the chips made by Alibaba, and I don't really need your NVIDIA chips anymore. So maybe America shot itself in the foot by trying to constrain chips going into China. China's been able to say, well, I can do without it. I don't really need your chips anymore. So good for Alibaba.
Okay. Further away, Mr. Kuo, let's take a look at what's happening globally. Investors, they appear to be unmoved by a report saying that U.S. President Donald Trump, he was considering a more targeted approach to the reciprocal levies expected to kick in on the 2nd of April. At the same time, we've got Chinese Premier Li Qiang saying at the weekend that Beijing was readying for shocks that exceed expectations ahead of the latest measures. Now, his comments coming on the back of his meeting with some of the world's biggest companies, including Apple, Qualcomm, FedEx, Pfizer. Do you expect any major swings to equity markets come next week?
Well, it's not next week, and I think it's the 2nd of April when some of these tariffs are meant to be put into place.
Yep, I think that's next Wednesday.
Is it next Wednesday?
Yes, it's sooner than we think.
Oh, my goodness.
April is coming.
I know. It's worrying, isn't it? Next thing we'll be talking about is Christmas, Tian Tian. Yeah. So, anyway, 2nd of April is D-Day, when the White House will announce how much they're going to be levying in terms of tariffs. So I think we have to wait until that day. Remember what I said last week, Tian Tian? Whenever the White House says anything, I just go yada, 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 yada. I mean, they were talking about 25% import tariffs on everything, and then now they're dialing it back and they're saying that it's going to be more targeted. So let's just wait until the 2nd of April and see whether or not there is going to be any tariffs. Because if you have looked at America, it's not the healthiest of economies at the moment. Again, despite what Jerome Powell at the Fed has to say, I look at America and I just think things are not looking great over there. And the last thing you want is to put in place these high import tariffs that is going to cream the American households. Households in America are going to find that it's so expensive to go out and buy things, and then what is going to happen? So let's just wait until the 2nd of April, and let's just see what the White House eventually does. It'll probably end up to be nothing, all talk and no action.
Okay, and we have about 2 minutes to go, Mr. Kuo. I do want to take some time with this one. As always, we've got a slew of earnings due this week from mostly Chinese firms, though. Haidilao, Pop Mart among them. Overseas, we've got Dollar Tree and Lululemon. What are you setting your sights on this week?
Oh, definitely Dollar Tree, Tian Tian, and then maybe Lululemon. Not because I do yoga or anything, but I just want to see what the high end is looking like. Because the last time Lululemon said that it expects revenues to grow around 12%. It'll be interesting to see whether or not they achieve that target. But Dollar Tree, for people who are not familiar with Dollar Tree, they're a bit like the Daiso of America. So they sell things for under $1. And if sales at Dollar Tree are going through the roof, it almost confirms what I believe, that the American economy is not doing that well. Over in the UK, you have companies like Poundland. And the last time when I was in the UK, there were just hordes of people going into Poundland trying to buy things. And when you have a look at an economy, have a look at those companies that can give you a feel for what is happening. And I think Dollar Tree will tell us an awful lot if they say that sales are doing very well. It means that U.S. households are struggling right now, and the last thing they really need is tariffs on imported goods coming into America, because that would just kill them.
I thought you would watch out for Pop Mart and toys.
Why would I do that? I mean, I'm sure there are people out there who like that kind of thing, who like that kind of thing, but not me. I'm not really that interested in Haidilao either, but it'll be interesting to see how they're coping and whether or not people are going out and dining right now, because that is also another barometer. And Haidilao is all over the place. So it'll give you a feel of how Southeast Asia is doing. But Dollar Tree, definitely for me, because it is very U.S.-centric, and I want to know what is happening to the U.S. consumers.
Okay, lots to watch indeed. Thanks so much for the insights, Mr. Kuo. That was David Kuo, co-founder of The Smart Investor.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.